Yeah, good morning. We're live with Zoom in with Seth David and Friends. I'm Seth David, your host for the next hour. We're going to flex those brain muscles today. We're talking about QuickBooks and accounts receivable. And I realized actually we covered accounts receivable pretty well last week when we did credit memos and refund receipts. I don't know why I love saying that. Receipts. It's fun. I like to butcher the English language because it has a way of making itself fun to butcher, which is not to even mention the fact that lots of people butcher it anyway, because it's butcherable. So here we are, and we were talking before we went live about logos and the story they tell or the story they should tell, and the fact that sometimes they tell a really cool story and companies don't bother to share that with the world, right? And it's a shame. They should. They'll get probably more business telling that story behind their logo and their brand than they do by doing all the other things they do, trying to suck business out of the internet the way so many people do, trying to get that one viral post going. A lot of people still haven't figured out it doesn't work that way. You don't get to decide which post goes viral. It's often going to be the thing you least expect and never the thing you expect, right? So stop trying. I love when people say, oh, this is going to go viral. Really? That's pretty much the kiss of death right there. As soon as you say that, it probably won't, right? We're going to get this thing to go viral. I love when people say that. I just start laughing. I laugh. So we've got a few people watching live on Facebook. That was funny last week, by the way, how many people were admitting I'm a dupe, right? Because they were both on the live Facebook feed and here in the Zoom panel. So, and I can tell already we have some dupes. Hi, Katrina. Which is cool. It's cool that we're getting a lot of people joining us. It's always encouraging for me to see that. And hopefully it's exciting for all of you. So, a couple of quick things. Let's do some housekeeping. Let's do it. So, real quick, if you haven't yet caught the recording or replay of last week's, it definitely is something you want to catch, especially if you end up liking what we go over this week. So we're going to go to the new website at new.nerdenterprises.com. Oh, and I'm not logged in. Hold on a second. Let me get logged in real quick, and then I'll share again. Because I had to clear my cache. So Matthew's with us.
I decided to let Matthew in anyway.
I'll be honest and say that I'm glad you
don't let him in.
All right. Here we go. And don't mind me, I'm having my breakfast. I was a little late this morning. All right. So, first of all, if anybody doesn't have an account on the site, get an account on the site. It's free. If you already signed up for a course, then you've got an account on the site. But you can get an account at NerdBuzz really easily, and then you can find NerdBuzz in your course locker. I'm just going to use my browser search to get down to it quickly. And if we go here, and you'll go to Zoom in with Seth David and Friends, I always put the most recent ones on top. So this was last week's How Cash Flows, Refunds, and Credit Memos. And I gave you the link to the template right here in the description. The T accounts that we're using is right here. So if you watch it on YouTube, you don't get this link. You got to come over here to get the link, right? And this way you can kind of follow along and play with the T accounts. Remember that when you do open it up, you're going to have a view only look. So you'll need to click File, and then make a copy. We'll create a copy of it in your own Google account. So you'll have your own Google Sheet copy of this, which you can edit, do whatever you want with. If you prefer, you can download it as Excel. I wouldn't recommend downloading it in any of the other formats here. It would be sort of useless to do so. So that's how you can get access to these T accounts. And these were the transactions we posted last week, which really did kind of cover accounts receivable pretty well. But we're going to look at it from a few other angles today. So I'm going to get myself logged into my sample company, and then we'll dive right in. In the meantime, if anybody has any questions, thoughts, follow-up, feedback on last week's episode or anything else, now is a great time while I'm getting situated here. Shannon says, I've decided my new logo will be a circle with a slash through it, an American Time and Labor. Nice. I love that. I love that. That's really interesting, Shannon, that somebody stole your blog post and then shared it as a press release. And who was it that refused to take it down? American Time and Labor or Business Wire?
They actually didn't refuse to take it down. I still do have that option, but I wanted them to do was to fix it and give me the credit for writing the post, and they did so far is add my contact information, but still left it looking like they're the ones that wrote it.
Yeah, they did. I saw that. They made it look like you were like a key contact to reach out to for more information about the matter.
Right, and so now it looks like Payroll Solutions Plus and American Time and Labor Company are somehow affiliated, which they are most definitely not. Because I had never heard about them before September 10th when they stole my article. And
well, the way it looked like to me, to be honest, from sort of a consumer looking at it on the outside, was as though they had reached out to you to get information for the article. It was almost like they had interviewed you, maybe. That's kind of the way that's the picture it seemed to me that they had painted with the way that they addressed it. So like we were discussing on Facebook, I would write a follow-up article about plagiarism and everything and just call them out for everything they did. And call out Business Wire for the fact that they apparently don't vet this stuff. They don't care. They get paid. They publish whatever you pay them to publish, which is interesting. I think a company like Business Wire, which I believe has a good reputation, could and should be expected to do more to vet their content to make sure that somebody isn't plagiarizing, even though they paid them, right? So
yeah.
Anyway, I'm almost there. I'm in my company. Last week, the company we used was On Target Inc., wasn't it? Or was it for hire? Anyway, we're going to use On Target Inc. today. And I'm just looking in the chat. I did not say Excel was better, Matthew. I just said it was an option.
Oh, well.
For the record, just in case Business Wire is watching. All right.
Talk about it next week, on Tuesday.
Absolutely. In other exciting news, I'm about to publish another 25-minute video for Bulletproof Bookkeeping with QuickBooks Online that talks about how to catch up your books quickly and accurately. And to me, it's one of the cooler lessons I've done, and I'm not just saying that to promote my course. It's, in all honesty, as I was writing it, I realized it was a really cool way of kind of recapping everything in the course so far. Because, when you're cleaning up and catching up a company, any company, one of the key processes is going to be kind of going through the whole bookkeeping process. The first thing we want to do is get the banking caught up, right? And then the next thing and then while we're getting the banking caught up, we start looking at what went in and out of the bank accounts, which is going to include deposits, which probably ties back to some kind of sales, I hope, right? And then having to reconstruct that whole sales cycle. So it really walks through, how to get a set of books caught up quickly. And I basically just refer back to prior places in the course where this is where you go to deal with this piece of the catch-up process and so on and so forth. So if I may say so, I think it's a really cool lesson. It's about a 25-minute video that will get published later today. It's actually already uploaded in Kajabi, ready to go. I just need to get the write-up in there, get a couple screenshots in there, and get it published. So I'm pretty excited because after that, I think there's maybe 2 more lessons that need to go up to truly complete the course. So if you haven't gotten into it already, just go to new.nerdenterprises.com/bulletproof, and you'll see my new sort of splash page that from there, of course, you can register for the course, but you can also opt in and get a series of emails that will get you links to some videos that I've done that are very relevant to the subject matter of the course, so that, I mean, I think everybody here already is familiar with my content, but in case you're not, or in case you're just curious to see a sample of what you can expect, I give you a catalog that I built in Airtable that's got over 3.5 hours of videos on QuickBooks Online, different things that I've done. And I just actually added a video to that catalog this week because I did a, what did I do? I did a video on intercompany transactions. That was last week. What did I do this week? It was a fun one, I thought. Oh, yeah, definitely fun and timely. Creating and building your chart of accounts in QuickBooks Online. And in this one, I specifically address the issue of possibly hitting or exceeding the limits that Intuit has imposed on the on Essentials and Plus. And, you know, of course, how to merge accounts. I also show how to go the other way because that might be important. So I really go deep here into the chart of accounts, how to structure it, how you can consolidate things. I give you some ideas and tips for what things I would look to consolidate in a typical chart of accounts. And so if you go in here, and this is in Nerd Buzz, so it's free, you can get access to the whole thing. And I give you some examples. This one's funny. This is the look that I get from business owners when I ask them, when was the last time you made use of all of that detail you've got in your chart of accounts? You know, that's the look I usually get, like, but don't I need it? No, you don't need all that detail. So one of the comments that I sort of make in this post is to suggest that in some respects, intended or not, Intuit might be doing us a favor by forcing us to take a look at our charts of accounts and see where and how we can truly clean them up. And then we can decide if we really do need to upgrade, you know, because the truth is, and I made this comment in the post, you'll see it, and I think I said it in the video too, as I've been looking around at my own clients, I'm realizing if you have more than 250 accounts on your chart of accounts, something is seriously wrong with you. Not with you, but you know what I mean. Something's seriously wrong. I can't imagine how you could possibly be getting something valuable out of a chart of accounts that's that big. Right? The exceptions, of course, that a lot of us have talked about are, you know, attorney clients with lots of trust account subledgers in the liability section of the balance sheet. And there's ways you can deal with that too. I haven't done that video yet, but I can certainly talk about that. So do check out this video. And as always, I welcome your comments and questions. Here's an example of one I found online from some other companies, example of how to set up your chart of accounts. And what scared me is that it's recent. And it's like ridiculously overly detailed, my opinion, of course. But I welcome your comments here. Please post your comments. I would love to get them. I would love to have these conversations in Nerd Buzz. My intention with this is to truly build a community out of it. The Facebook groups are fun and great, but here we can be so much more detailed and visual with the discussions, you know, because I can put screenshots in there and all that sort of thing. So do check that out when you get the chance.
Seth,
yes.
is your course going to cover QBO Advanced?
No, because that came out after I started. Well, it didn't quite come out after, but I hadn't even looked at it until well after I'd started developing this course. So it's not going to look at QBO Advanced. However, the next course that I'm doing, which is going to be Property Management with QuickBooks Online, does use QuickBooks Online Advanced as the product, because I especially want to show how you can use the custom fields in QuickBooks Online Advanced to get some good reporting out of it, which is really specifically useful for the property management use case. And I've also got an article coming out on firmofthefuture.com soon with kind of an overview of what will be covered in much greater detail in my course. And Intuit has told me they're going to link back to my course. So I got to get that splash page up this weekend so that once that post goes live on Firm of the Future, they'll be able to link back. And of course, there will be an opt-in form so I can gather your names and emails for those of you who are who definitely want to know about it the minute the course goes live, which should be soon. I've already recorded most of the content. Anybody else? Any other questions? Anyone? Going once, going twice? All right, let's talk about accounts receivable. It's really, really exciting stuff. Accounts receivable is. I'm going to just close up some of these extra tabs here that I don't need. And I'm going to show you something really cool in a minute. But first, let's go clear up my trial balance. So I'll leave the contributions in there for this. And yeah, this was last week's file because we had the Here's the refund receipt and the credit memo, which we had voided. For some reason, I didn't think this was it. Anyway, let's get rid of that. Delete. And back to the report summary. I love using the trial balance report, by the way, especially in sample companies, to kind of review what's inside. You know, it really helps. And let's get rid of these management fees. Do I want to get rid of these management fees? Yeah, we'll start all over. It's fine. All right, so all we should have is the initial contribution when we start. All right. All dates. Wonderful. Go away. Okay, perfect. So we're starting clean. We have an initial contribution of $500,000 that was deposited into the bank. So we have something to work with here. That's been backdated to January 1 of 2019. So if I start with my balance sheet, what I really wanted to make sure of here is that, you know, clean slate, no accounts receivable, no tricks up my sleeve. Okay, let's make a copy of this one. This one we'll say was for CM and refunds. You got to be careful about, you can't put a lot of different kinds of characters in these tab names. Let's duplicate this. And this is going to be just general AR. Like, I doubt it'll let me put a forward slash. Maybe it will. Google Sheets tends to be more forgiving about these kinds of things than Excel is. Is Matthew still with us? He looks
Wait,
like,
did you say Google Sheets is better than Excel?
I might have. I might have let that one slip.
Yes. Where's Sarah Prevost when I need her?
Kids today. So I'm going to leave the first three items in here. Let's get rid of everything after transaction 3. Sorry, I should have done this before recording, but I just didn't have time this week. I apologize. Somebody commented on one of my YouTube videos this week. It said something like so much fluff. And so I wrote a reply saying so much free.
Hey, Seth, since you're in Google Sheets, can you show me how to do a pivot table timeline?
Go
Why
away.
did I know this was coming?
I'm sorry, Matthew, your audio is breaking up. There must be something wrong with your equipment. All right. So let's review. We've got a starting balance, not really relevant to accounts receivable, but just the fact that we start off the bank with some amount of money, right? John Wick banks with Continental Bank, same place where he stays at the hotel at the Continental in New York City. So he starts off with this opening deposit. Now, as soon as we're talking about accounts receivable, of course, we're talking about sales, which means we're also talking about customers, right? So when I want to do kind of a deep dive on accounts receivable, I really want to look at this from all angles. And if you've ever watched me do any kind of a demonstration on reviewing the balance sheet and the fact that the balance sheet is and should be your checklist for how to compile and maintain the books for any company, then you've heard me make the remark that the reason the balance sheet serves as the checklist is because so much of what's on the balance sheet ties directly back to various places on the profit and loss statement, such as accounts receivable tying directly back to sales. Could there be a case where we deposit money into the bank and post it directly to sales? Yes, absolutely. But in most cases, when I see that, it's usually a mistake, right? Matthew says John Wick does not actually use money. He exchanges special coins. But those coins are money. That's currency. Those coins are a form of currency. We didn't always have paper currency. Back in the day, we used to use coins as currency. And we still do. I know I've got some quarters sitting around here, right? Same idea. He probably had to exchange money for those coins or something. How did he get those coins, right? Or he did
Killing people.
He did a job and got paid in coins, and then he uses those coins to buy his ammunition and to buy his safety and whatever else. Anyway, so I want to be clear about the direct tie-in between accounts receivable and sales, and obviously customers sit right in the center of all of that, right? And so if we're going to do a deep dive on accounts receivable, I want us to look at this 360 degrees all the way around, right? So first of all, how do I establish an account receivable? I post an invoice, right? Interestingly enough, and I had tested this years ago in QuickBooks Desktop. We talked about this last week. There's essentially two kinds of sales transactions you can post, either an invoice or a sales receipt, right? In QuickBooks Desktop, if you posted a sales receipt, it did actually run the transaction in and out of accounts receivable, but you really didn't see it because it would go through AR, but then the payment's being posted in that same transaction, so it goes right out of AR in the same transaction. In QuickBooks Online, I've noticed when you post a sales receipt, it doesn't touch AR. It goes directly through between whatever deposit to account you've chosen in the dropdown and whatever income account is tied into any of the items that you've used on that sales receipt. In other words, the sales receipt usurps AR altogether. And technically it should, right? The point is there is and never has been a receivable. I post a sales receipt when the sale is made and paid right there on the spot, right? So that's an important distinction. And let's prove my theory. Let's actually post a sales receipt first. And remember, I always like to think when I look at these transactions in terms of how to break them down into debits and credits in the background. So we're going to post a sales receipt for always, right? Let's say the payment method's going to be a check, right? And we're depositing it to Continental Bank. So if we're depositing it here, that's my debit, right? Whatever the deposit to account here is my debit for whatever the full amount of the receipt is, right? The entire amount of the sales receipt, whatever it nets to, is my debit to whatever account is listed here in the deposit to dropdown. Everybody clear on that? Now, as we discussed last week, any product or service I put in here and the account that it's linked to is what's getting the credit, right? So let's go back into another tab here. Let's go into products and services. All right, am I filtered here? No, I'm showing everything. So let's just create a new product real quick. And we'll call it some service. Actually, we'll call it a hit. This is John Wick's company, right? And then we're going to create a new income account here. Undisclosed services, right? I hate when it does that. I hate when it renames my account. I actually talked about this in the video that I showed you guys earlier that I did. It makes me nuts.
There's so much fluff, Seth.
What?
So much fluff.
Yeah, so much free, so much fluff. All right. All right, we're not subcontracting these services out, so I don't need purchasing information. So this account, when I use this item, a hit, this is the account that's getting credited in the journal entry, right? So if I go back to here, credit is going to undisclosed services for $10,000. Okay, the debit's going to Continental Bank, right? No accounts receivable in the mix. And the way I'm going to prove this, excuse me, is I'm going to save it, and then we're going to look at the journal entry that sits behind it like we did last week. Okay, so notice there's no accounts receivable in the journal entry. It's just going straight to the bank and straight to undisclosed services. It does not go in and out of accounts receivable. Now we're going to post the very same thing in an invoice so we can see the difference. So let's go post an invoice. Okay, same thing, a hit, but just to differentiate, this time it's going to be $15,000. It's a $15,000 contract. All right, and we're going to hit save. And then look at the transaction journal. And obviously at this point, there's no bank account in the mix because it hasn't been paid for yet. So here we do increase accounts receivable. And we hit the income account, of course, in the same way as the sales receipt did, right? So now let's look at a balance sheet. Accounts receivable, 15,000. Bank account has the 10,000 in it already from the sales receipt. Okay, net income 25,000 because we've posted 2 sales, one for 10, one for 15, right? And this is, of course, excuse me, the net income closing out to the equity section. Let's look at an actual P&L, right? There's our undisclosed services for 25,000, right? So that's how everything balances. And of course, when I receive a payment on this, it's going to zero it out. So when I receive payment, what I'm really doing is I'm crediting accounts receivable, right? Credits reduce assets. I'm crediting accounts receivable for whatever the amount is I've received. And I'm debiting whatever account this got deposited into, right? Here's your debit. Accounts receivable is always going to be your credit. You really don't have a choice in the matter on a received payment transaction. Save and close, accounts receivable is gone. Now the whole 25,000 that we've made is sitting in the bank. Right? So when we receive a payment, we're just moving money from accounts receivable over to whichever bank account it went to. Now recently, I looked at a situation where, and this was based on a question I got on YouTube. Somebody said, hey, I've got a situation. My customer actually earns a commission on the very thing I've sold to them. And they deduct that commission from the payment that they make to me on my invoice. How do I do the accounting for that? So let's undo this payment and see what that looks like. Actually, I don't even need to undo it to show you. Here's what we're going to do. First of all, instead of depositing it directly to the bank, we have to run this through undeposited funds or some kind of a clearing account because we have to deal with the fact, and this is where a lot of business owners get confused on this, by the way. I know you all understand this very well, but what I'm hoping is maybe this will help you when you need to explain this to, to your customers. And it's hilarious. I'm looking at the chat. I'm sorry. I guess Shannon didn't know who John Wick was. Sorry, Shannon. Maybe it's a very United States thing. Well, no, you're in. Wait, I always forget. Are you in the U.S. or Canada? No, you're in the U.S. Where are you, Shannon? Where do you live?
Almost in Canada. I'm in Minnesota.
Okay. All right. So maybe John Wick is not as popular there as he is in the major cities like Los Angeles here.
Or
They
I
have a
just
different
haven't
type of
seen.
A.
Or I just haven't seen a movie since 2006.
Oh, that would help. No Netflix or anything, or Amazon Prime Video?
We watch Netflix, but
Okay.
just usually not movies because we don't have that much time to sit still.
I got you. You know what? I salute you for that. I salute you for that. All right, so back to business. So the way I explain this to customers, because they're thinking, I can't receive a payment for $15,000 because that isn't what I got, right? Let's say the commission that gets paid out is $5,000. I only got $10,000. So the business owner customers get really hung up on this very part, is they think they have, because it says receive payment, so it has to be the payment I received, right? And this is where they get hung up. So the way I explain this screen to them is I say, ignore the words receive payment. This obviously makes sense because it's generally speaking what it is, but the more appropriate description to put up here, if it would be practical to do so, would be to have it say, give the customer credit for having paid their whole invoice, right? Or whatever part that they do deserve to get credit for. In other words, even though I didn't get 15,000, I still have to put the whole 15,000 in because when the dust settles, they don't owe me any more money, right? And so that's what has to get put here, and that's why and how. But we can't put it directly into the bank because that's where we have to deal with the fact that we didn't actually receive the whole 15,000. So I don't even have an undeposited funds account. This is a thing I've noticed in QuickBooks Online, by the way, is it seems like undeposited funds does not get created automatically for you. You have to go in and create it yourself, which is extremely annoying to me. But instead of wasting my time with that, I'm just going to call it a payment clearing and add that account in. Because it doesn't really matter in this case. We just need a place to park it so I can reduce it before I put it into the bank account, right? So payment clearing, cash on hand is fine. Let's do it as an other current asset though, which means we'll do it like that. All right, save and close. So I'm going to deposit to this payment clearing account the whole 15,000. And then let's go back to my balance sheet. So there it is. And now what I can do is I can record a deposit where we can pull the whole 15,000 out of here, but then deduct the commission that has to, get deducted, to effectively pay it back to the customer.
Isn't this where you're going to run into a challenge though? If you try to actually, if you want to go to your make bake deposit, you won't have those funds show up in the undeposited funds window, right?
Correct. You just have to know that you're pulling it out of payment clearing, right? So I'm going to say minus 15,000 here, right? And so it's going to take the whole 15,000 out of payment clearing, but now I can record a commissions expense, and we'll just add that in real quick as an expense account. All right, and whatever, we'll call this other office and general administrative expenses, save and close. And this would be the minus 5,000. So now this accounts for the fact that what we really got is only $10,000 because we're deducting a commission expense out of what we received in order to arrive at the amount we did receive. And of course, this will now show up. Remember, debits and credits. We're recording a deposit. This gets debited. Whatever account is over here is getting credited. But what's a negative credit? A debit. A negative credit is a debit. So we are actually debiting the commissions expense account, which is what we want to do. Debits increase expenses, right? So, and Courtney actually called it as I was creating it. So yes, we're going to create, as you can see here, we've created a separate line item for the commission expense, reducing the amount of the deposit. Now I'm going to be clear here. This is not what I would call bulletproof. And after I post this and look at the banks, at the financial statements, I'll go back and explain how I would do it in the way that I would call bulletproof, and I'll explain what the difference is. So first, let's save this. And this is what I mean about compliance versus bulletproof. This gets the job done, right? I now have 5,000 less in the account now that I've changed that transaction, right? If I go back to my profit and loss, there's my $5,000 commission expense. So it works perfectly, right? I've got the right amount in the bank and I've recorded the expense properly. But the reason it's not bulletproof, and I know I'm getting, granular on this, but the reality is now I've got a commission expense line item on my P&L that ties back to a deposit. It's not wrong. It's just not really clean. It's not a good, clean audit trail, my opinion. So here's how I would actually do it in reality. It's always going to be a little bit extra work to do things according to the bulletproof method, but it creates a cleaner audit trail, my opinion, right? So instead of doing it this way, here's what I would be inclined to do. And there's a couple of ways we can handle it. But let's say that let me think how to do this the best way. So let's say that what we did here instead was we take the whole 10,000 out of payment clearing and leave the 5,000 sitting in payment clearing. Just bear with me on this, you'll see where I'm going. Okay, so now the P&L does not yet show the commissions expense, and the balance sheet has the same 5,000 still sitting in payment clearing. Now what I'll do is I'll create a bill to commissions expense for, we would need to establish Always Right as a vendor, right? Because they were the customer that we're saying here gets a commission on their own sale, right? So I'll just put Always Right with a little V in parentheses to distinguish that this is the vendor version of them, right? Because we also may need to 1099 them for this, right? So the way we did it directly in the deposit, we wouldn't be able to pick this up as a 1099able amount. And this gets 5,000. And then there's a couple of ways I can deal with it from here. I can simply save this and then make a journal entry and take the 5,000 out of payment clearing and apply it to here, or I can just do that directly here. And of course, I would put a nice detailed description explaining money withheld from invoice payment, ... And I think some of you saw that I recently gave the example of where I would even go as far potentially as taking the deposit. Let's drill over to that for a minute. Might as well do it instead of just talk about it. So here's the $10,000, the $15,000 invoice is what got paid. I can go over to the payment, and I can copy the URL and put it in here. See that in lieu of commissions, right? Nice detailed response, putting the trail of breadcrumbs right in there. I wish, and we should all submit this as feedback, is that URLs put in descriptions and transactions would render as an actual hyperlink. That would be so cool if they did that. In the meantime, we just have to copy and paste it. So in order to make it easy to copy and paste when you're doing something like this, always just make sure you leave a space around it so that it's easy not to pick up that parenthesis when you're trying to copy and paste it to get into that transaction. Right? Now, when I save this, everything will work. Right? I've got my $520,000 in the bank, which is correct. I've got no more payment clearing, no more accounts receivable. Let's get out of here and back to the P&L. I've got my commission expense, and I've got my income. So everything works perfectly. The difference is, and again, this may never even matter in many cases, right? That you could have just done it the first way I showed you, but the difference here is, to me, this is a cleaner audit trail because I've got an expense that's driven by a bill. Right? It just looks weird to me to see a deposit showing up in an expense account when I'm drilling into the details. And where this matters, where this does matter, is I'll give you two scenarios. A, bottom line, you have somebody scrutinizing your books, whether it's because of an audit or in a more common and less scary use case, you simply have a potential stakeholder taking a look and scrutinizing your books, and they want to assure themselves that the bookkeeping is done well. Right? And anything that raises even a potential question, anything that makes somebody turn their head to the side because they're wondering why is there a deposit in an expense account, can only lead to more scrutiny. Where this, is, just accounting-wise, to me is much more straightforward. It makes sense. I've got an expense in the form of commissions. There's a bill. I can drill into the bill. I can see I'm paying always right this commission, and I've got a nice memo here that explains exactly what's going on.
So, Seth, the only challenge that I would see with this is if people do actually have that undeposited funds amount, they're going to have a $15,000 amount sitting at the top of undeposited funds.
If you're using undeposited funds, then you would basically be creating an extra step for yourself with this. You would have to take that whole amount and deposit it into a payment clearing so you could do this. Or there's really no other way around that. In the video that I recently did, I did use undeposited funds for the use case, right? But the cleanest way to do this is not to use undeposited funds, but instead to use the payment clearing, because this way you can split the amount up. What I had done originally, I think in the other video where I demonstrated the same concept, was I did create a bill, and I believe I did do a journal entry. I forget exactly how I did it. If you watch the video I just posted, you'll see that version, Matthew, of how to address this.
You could do it this way. You could do it this way, and then on the make deposit screen, your add funds to the deposit would actually be detracting funds from the deposit, and that would go to the payment clearing, and then you would.
And then you could clear the payment clearing out. Yeah, that's what I mean. That's the extra step you would have to do if you used undeposited funds on this.
Yeah, write the bill out of payment clearing would be the best way.
Yeah.
or the payment for it. So thank you. Sorry for the.
Yeah, no, it's great stuff. It's again, I want to make this clear. To do it in what I refer to as the bulletproof method is always going to require some extra work, but it's sort of like a cost benefit, right? The extra work gets you a nice clean audit trail so that if and when your books are being scrutinized, whatever the reason, it's going to raise fewer questions, which means you're going to get a cleaner audit, or you're going to get it. It's just going to be easier to get it through to funding if that's what you're looking for. That's what I mean by having it be bulletproof, that when the day and time comes that somebody's scrutinizing your books for any reason, you've got your ducks completely in a row, so to speak. And you, frankly, you sleep better at night because I know I'm so glad when a client is willing to pay me the extra money to do things like this, because it does require extra resources. So if we're going to do bulletproof bookkeeping for a client, it should cost more. And by the way, where I got the very concept for bulletproof bookkeeping was based on a conversation I had with Ron Baker. Ron had actually told me a story when I interviewed him for the Authentic Accountant podcast about how many, many years ago he was traveling a lot, and he came home one day and he noticed that his gardener wasn't doing a great job. There were a lot of little things that he was counting on the gardener to do when he wasn't around that, just like lack of attention to detail, I guess, is what it boiled down to. And so he decided to find a new gardener. And when he was interviewing gardeners, the gardener that he wound up hiring, he hired him because of the approach that gardener took with him specifically. And that approach was basically like this. He says, look, I'll keep your curb appeal up to par with everybody else on the block for this price, or I'll give you the best curb appeal on the block for this price. And when he said that to me, I thought, what's the accounting version of that? And literally after racking my brain on this for a couple of weeks and really thinking back to the conversation, in other words, it took a while before it hit me. But when it hit me, I said, oh, I've got it. It's compliance versus bulletproof. Compliance is good enough. The numbers are right. They're accurate. But bulletproof means I can easily prove every single number on every line item on any financial report that ever gets issued from that set of books. And so as you've just seen demonstrated here, it's not just about documentation. Obviously, that's an important part of it, and having a product like Bilbies that I love, where you can easily pull up a copy of any bill to prove any expense you have. And it's important, remember, that what the bill actually proves, right? Because a lot of people, a lot of business owner clients think it should be sufficient just to have the transaction information that's on the bank feed, right? Or the credit card statement. And what's important is, and I put this out there a lot recently in social media, I have this card that I kind of created using PowerPoint with the description of this, that all the bank feed proves is the date and the amount, and it proves what's called occurrence. When you look at the management assertions that are inherent in a set of financial statements, there are about 5 basic assertions, and there's different sort of variations on this. But all the bank feed will prove among those is it will prove the date, which is timing. It will prove occurrence, that it did happen, and it will prove the amount. But it won't prove classification. It won't prove that it's classified correctly, because I don't know what that money was actually spent on. I know where it was spent. I know with whom it was spent, but that doesn't mean I know what for. And I use the classic example that we see the name of a gas station. We can't assume that's fuel, because almost every gas station these days has a convenience store, which means it could be food. It could be lottery quick picks that they paid for at the gas station. And I hope they win, but the transaction's not classified correctly in the bookkeeping.
I had a client yesterday or 2 days ago who sent me a receipt for a gas station. It was a good thing he sent it in, because it was for a 12-pack of Heineken.
I love the ARCO ones and the people
Which is
recognize
advertising in his case, he says.
Right. It's promotional. I'm buying beer for a client, right?
Yeah.
What were you saying, Matthew?
I was saying I love it when people go to ARCO, and in ARCO they always break out the cash back at the bottom. So you'll have like $8 of gas, $100 cash back, and they submit
right,
it
and they
back
want
all the
the
time.
108 going to gas. Yep, that's classic. I love that. Yeah, I can share some interesting stories about things we've figured out about clients based on like what they spent and where. Like you'll see a cash withdrawal, an ATM withdrawal of like $1,000, and then you'll see a convenience store charge of like 20 or 25 bucks, right? And then like a few hours later on the same day, there's a charge at, let's just say, some kind of an adult entertainment type place. I have a client where this became very clear, the picture from what we saw in his receipts. And I was like, and he had told me when I first took him on as a client, he's no longer a client, by the way, but when I first took him on years ago, he told me, hey, I have a lot of large cash withdrawals that I need to record as business expenses. And I'm like, well, you just need to get a receipt so we can prove the expense. He said, what if I can't get a receipt? And I'm trying to think, okay, what kind of an expense could I ever make where I couldn't get a receipt? And I'm not going to say it. I'll leave it to your imaginations, but there's really only one conclusion I could draw from that, where he wouldn't be able to get a receipt for something that might be in the range of anywhere between, let's say, $500 and $1,500 in cash.
Tell that person to get a business license.
Exactly. Tell them to set up a corporation.
You could do a whole show on stories we could tell over the years of what people have asked us to write off.
You know what? Halloween is coming up, and I used to do it. I stopped. We used to do scary bookkeeping stories. So that's at the end of October.
Can we dress up?
You can dress up. Some people have. When we did it with Google Hangouts, Google Hangouts had those things you could kind of just put on. You can almost like create your own costume with Google Hangouts.
Last year, we just did a whole bunch of masks with Seth's face on it.
That's right.
That's perfect for Halloween. Absolutely. That would be very scary. But anyway, I think that's good on accounts receivable. Between last week and this week, hopefully there's absolutely no question, about accounts receivable and how things flow, right? How the cash flows. And I love the use case of having to take a deduction out of the payment that you receive from a customer, because that kind of thing comes up a lot.
Merchant processing.
Yep. Yeah, the fees, right? And I've got videos on that, but it's the same concept, right? Yep. The bottom line is I have to give the customer credit for having paid the full amount of their invoice and then take a deduction out of it for some kind of an expense or payout or something, right? One of the first times I ran into this many years ago when I had just started my business and I was working with a commercial plumbing contractor, they had jobs where, per the agreement that they signed between their customer and their subcontractors, there were certain payments that would have to go from their customer directly to the vendor. And in a way, it seemed like it was because the vendors didn't trust my client to pay them. So we had to account for a payment in full from a customer that we never received, and then it pays off the vendor, what my client owed their vendor. And sometimes it was the full amount of what was paid that had to be written off against them. So we have a receivable that gets closed out and has to get matched up against a payable, which you can't do in one transaction. In QuickBooks Desktop, you couldn't do in one transaction. You can, and QuickBooks Online does give you that latitude. Desktop never did. It was a way to keep people from sort of hanging themselves, because you can really screw things up by including accounts payable and receivable in the same entry. Bottom line, though, is that got real tricky. How do I, because I had to receive the payment, kind of like we saw today. Then I had to zero it out, and that zeroing out had to then be used as an offset to the payable. So
we had one just like that also. It was a precious metals company, and they would consistently, people would take their silver or gold coins, and they would trade them back in for, if they had silver, maybe they were trading for gold, something of that nature. And it was this relationship between two companies that would always go back and forth. So they would take the coins from the customer, sell it back to the vendor, get a certain amount of credit from the vendor. Then the vendor would give my client brand new coins to sell to the customer. And I'll show you the Lucidchart about it on Tuesday.
Nice.
Yeah, it was nuts.
Nice. Speaking of Lucidchart on Tuesday, for those of you who don't know, I'm going to be taking the day off from 97 and up. Greg is going to be running our call. Thank you, Greg, for pitching in. Greg, I would have invited you down to join Matthew and I on this, but by the time I did, they had already sold out. But Matthew and I are going to a little Lucidchart conference here in downtown Los Angeles to learn and get ideas for clever ways to use Lucidchart. Matthew and I have already kind of compared notes on this a little bit. So I'm really excited, of course, to spend the day with my good friend Matthew, but I'm also excited to learn and get ideas for ways to use Lucidchart. Some of you may remember a few years back when I first got hot on Lucidchart, I did create a concept that basically used Lucidchart to create a sort of what I called an interactive infograph. because it really kind of breaks down looking like an infographic, but it's interactive, meaning I had links to documents that you could use as a sample service agreement, and you can embed videos right in the Lucidchart diagram. So it had the whole onboarding workflow kind of sketched out with links to documents and links to suggested apps for different parts of the process and so on. So Matthew and I were discussing this the other day. After Tuesday, when we get some new, fresh ideas, I'm going to plan some time and set it aside to get back to that. And really think in terms of ways of creating digital products using Lucidchart. I'm sort of very excited about that.
I just did that in my blog this week. I made a graph and I had videos tagged in it for people learning lien law, and they're little short videos.
And what did you use to do that?
I use Lucidchart.
Oh, you did? Okay.
Yeah, I have the paid version, so I can.
Yeah, me too.
It's cool. I love it.
So, but what is it you can do in the paid that you couldn't do in the free?
I don't know. I went to the paid because I liked all the templates, so I paid for it. It's not that expensive, and stop smiling. And then I like the shortcuts, and it's cool because I make the graphs. We use a lot of graphs. Sarah and I have been using a lot of Lucidchart. The two of us have been making a lot of things for going forward with all these law firm clients that are, switching to QuickBooks in advance. So, and then doing that now and adding a little, like, here's what you do, and then they can click the link in it, and it'll take you right to the short video, so they can see the actual thing in my fake file, and using my fake lien law file, they can see the steps on how to do it. It's really nice.
Yeah, it's cool how you can insert your own images, and just so you can create anything. Like, I love to use this phrase about apps, and this is when I can use this phrase accurately about an app, it's one of the reasons I often love that app is if you can conceive it, you can create it, right? If I can say that about an app, I absolutely love it. Which reminds me real quick before we run, speaking of that, I've been playing around a lot with Chata.ai. And having recently tightened up my 2018 books because I was on extension and I needed to make sure they could be filed, I then used Chata to cut up kind of an analysis that I always like to do, but I would do it in other ways in the past. And I was able to create this beautiful pie chart that broke down my different revenue streams so I could really see the product mix and how things sold. And I did something very similar with my expenses. And of course, some of it just validated what I already knew, but some of it was really interesting. Seeing how much of my expenses were comprised of payroll, for example. It's always the biggest expense in a company. It should be. And then some side-by-side year-over-year comparisons of expenses for 2017 versus 2018. And when I get my 2019 books caught up, I'm going to do something similar to compare 2018 with 19. But it was just really cool how I was able to create some really slick-looking reports, and it was easy to do. Once I learned how to use this product, and if you're not familiar with Chata.ai, just go check it out. It's really cool. You use natural language to query your QuickBooks Online data. So you can say, give me an expense comparison year over year, 2016 to 2017, or 2017 or 2018 to 2019, and it will run that query for you. And it's it's a little bit of a learning curve because you have to learn how to query the data properly. But the other thing that I love about this company and what they're doing is they're actually analyzing those queries that people are typing in and using that to improve the product. So a query that doesn't work quite the way you intended today will very likely work exactly the way you intended 6 weeks from now. And I love the fact that this company is alive and behind the product, sitting there seemingly 24/7, just enhancing the product and making it better all the time. I love getting with products like that because I just know the product is just going to keep getting better and they're not going anywhere. So, and I wasn't paid to say that. Maybe they'll start paying me now that I did say that. I don't know. But that was truly my honest opinion about this app. So if you haven't already, check it out. And that's it. That's all I got.
Right on time. 12 o'clock.
Right on time. If you haven't already, join 97 and Up. We're having a lot of fun and learning a lot in there. Do it. Join it. Come hang out with us. We're a lot of fun. We're a great bunch of people. And we're like a bunch of accounting
nuggets.
What?
We always get nuggets.
We do.
Where's Lisa? Where's Lisa?
Maybe I'll change it I'll call it 97 Nuggets.
No, Marriott will be mad at you if you do that.
Okay. Maybe I'll just have a little sort of sub thing that we'll create called 97 and up nuggets, and it'll be like a link to these little pearls of wisdom or, really cool tips that somehow I accidentally say, because that's really what she's talking about, right? It's like things that I sort of say inadvertently, not the thing I intend to be teaching you, but somehow somebody was like, oh, I didn't know that. And it's like a sidebar to what I'm actually talking about. Anyway, on that note, go ahead and join Gina's Hangout later today, 2 o'clock unofficially, 2:30 officially. They'll go live and talk about whatever they talk about. It's usually you get what you get with Gina and her band of merry accountants. And that's a wrap. I'm going to go. I'll see you later.
See ya.